Is the ultimate Bitcoin cheat sheet that you need to know going into the end of this year and 2025. As you know, we're already in the banana zone. So we'll be talking about this in a lot of detail in the next few charts. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. And let's dive right into it. So we're very familiar with the boring zone and the banana zone. The boring zone tends to occur for quite a few months after the halving event, but that tends to precede parabolic price action towards the upside. And we've seen this across cycles from 2012 to 2016 and of course 2020 to then really transitioning into this cycle, 2024, and now we are in the banana zone very firmly. And as you can see, we've been talking about this reaccumulation phase for a long time. And one of the things to really take note of is that this reaccumulation phase in 2020, post-halving reaccumulation, that lasted 163 days. In this cycle, we saw that reaccumulation phase elongate and extend by an additional 45 days or so. And that's really important to take note, because if we're considering a parabolic phase from 2020, which lasted 385 days, can we really consider a copy-paste scenario based on the fact that potentially this reaccumulation phase has potentially eaten into our parabolic phase? So if we talk about 160 days, and then we have those extra 145 days that otherwise could have been in the parabolic upside phase, does it mean that this reaccumulation phase ate into this parabolic upside phase, or are we going to actually see the parabolic phase extend a little bit? And from my perspective, I think this would mean that the parabolic phase is a little bit shorter. And it's better to talk about it in worst case scenarios, because that would just mean that this parabolic phase in the cycle could be shorter by 45 days. And let's just entertain that for a second, because when we're talking about this banana zone, things really do go parabolic. We've seen that so many times in the past. And let's just talk about some of these zones, because we'd see uninterrupted upside, small dips on the upside, and very few corrections in the middle. So these corrections tend to occur. Those tend to be fantastic buy-side opportunities, especially if you consider the first major corrections. So we had a first major correction here in the 2016 cycle, and then a second major correction. But the third major correction, that was already the end of the bull market. So going back to 2020 here we have a dip. Here we have that first major correction, maybe a second major correction, and then we don't get a third major correction. So we do see the bear market develop after that bull market peak. So going back to 2012, for example, we see very few moments of respite and pulling back for Bitcoin's price action. So once we do crash after a 300-day parabolic upside period, that tends to be the end of the bull market. So we're probably going to be getting a dip at some point, right? We're probably going to get a price discovery correction at some point, as we've seen in the past. We might get a second one in the future as well, as we've seen in the past. But in the meantime, we're going to see price discovery uptrend number one. And so this is really that sort of ultimate cheat sheet that's going to really guide you over these next few months and 2025. We have that first parabolic uptrend and that dipping there. Here, first parabolic uptrend before that dipping. So that's the first parabolic uptrend. Then we get that dip, which across cycles tends to happen. We then see the second parabolic upside, as you can see here, cross cycle. And then, of course, that major correction, which essentially you can just do this, right? Because we see a correction here, we'll see a correction here as well at some point. And then maybe one final correction near the top. And that just gives us an idea in terms of the roadmap of what to expect going forward. But if we're talking about these reaccumulation phases, This was 160 days after the halving. This was slightly longer at 205 days after the halving. 2016 gives us a bit more clarity on the fact that this was 150 days after the halving, 154 days after the halving that this reaccumulation phase took place. But then you can actually see that the parabolic phase of the cycle actually lasts 350 days. So if we're comparing 2020 in that regard, the 2016 phase was slightly shorter. So we have 385 days parabolic upside in 2020, 357 days parabolic upside in 2016. So are we seeing some sort of extension in the parabolic phase from 2016 to 2020? And so it's a little bit, there are quite a few variables because we're seeing an extension in the reaccumulation phase by 45 days. And if we're comparing the 385 days of 2020 and 360 days of 2016, then there's an extension in the parabolic phase of the cycle by some 30 days almost. So if we've extended by 45 days in the reaccumulation phase, and we tend to see some extension by 30 days or so in the parabolic phase of the cycle across time, then does this extension then cancel out with that potential extension in the parabolic phase of the cycle that we tend to see? Overall, I talk about this in a lot of detail in the Rekt Capital newsletter, in my most recent newsletter, so feel free to check out the link in the description down below and feel free to read and really find out what I talk about and how I come up with the idea that maybe we do see a slightly earlier peak in the bull market as a result of the acceleration that's still remaining in the cycle. Remember, we broke out 2 weeks before schedule in terms of the 214 days after the halving, where we tend to see new all-time highs. We broke out 205 days after the halving, so a bit of a 2-week acceleration there. But that's pretty phenomenal because when we peaked in the first old or new all-time high at the time, this was an acceleration of 260 days, and we narrowed that down to just 14 days, which is impressive, dramatic, but nonetheless, there is a lingering rate of acceleration in this cycle that we simply cannot ignore. And if we just take away 14 days from this potential period here, we factor in the fact that we have 45 days right over here, and maybe we do see an extension in terms of parabolic upside across phases and across cycles, then really what do we come down to? We come down to a conservative estimate of approximately 300 days, and that just gives you a bit of an average. It factors in the worst case scenario that we top out a little bit sooner, factors in the acceleration in the cycle, it factors in the extended reaccumulation phase in this cycle, it factors in quite a few variables that most people aren't going to factor in because it's not really engagement worthy, whereas here we're actually trying to come up with a realistic roadmap and plan to financial freedom. And that's what we always do here on the channel, on my Twitter, on my X. We always do that in the Rekt Capital newsletter. So if you haven't signed up to the newsletter, feel free to click in the link in the description down below. But I think it's really important to also talk about diminishing returns and the fact that we are exiting this reaccumulation phase of the cycle. We always see reaccumulation around old all-time highs. We tend to see these ranges be either very short, very zigzaggy and very volatile, very short again, or extremely overextended in terms of time, 205 days, let's repeat that. But then inevitably we transition out of that phase. And you can see here that, of course, we tend to see phenomenal upside to the next bull market peak, the final new all-time high that we get before the bear market. But of course, we have to understand that there is diminishing returns involved in each of these cycles. And that doesn't mean that we're going to struggle in this cycle, but we have to be cognizant of some of the changes that inevitably occur in a maturing asset class that Bitcoin is. And what's interesting is that this chart simply can't keep up with the price action because Bitcoin right now is at 91.5K, and that's a little bit too quick for this price chart to keep up. And the BNC, the Bitcoin Liquid Index, it's great to just showcase history dating back to even 2011, but does struggle to keep up with the price action in real time. But nonetheless, I do digress. If we talk about diminishing returns and we think about maybe halving some of that, diminishing some of those returns, then that still gets us into 150, 130, 120. So there is still upside left to enjoy for Bitcoin's price action. And if we talk about some of these phases in terms of length, then this is something we get to enjoy in terms of a 300-day window for the parabolic phase of the cycle. And the parabolic phase of the cycle isn't by any means smooth sailing. You can see that we tend to see corrections on the way up. Those are your moments for dollar cost averaging into the market, but it's important to do so more with conviction in the very early stages of those price discovery waves. And if we talk about diminishing returns across cycles, then we need to talk about diminishing returns across price discovery uptrends. So this is that price discovery uptrend in the very first 8 weeks of price discovery. And over here, we had this for 4 weeks. So this was the first price discovery uptrend. And notice how that also diminishes across time in 2017. And then you'll notice here as well in 2021, where we also diminish before we finally pull back, but not that much, which is quite interesting. That diminishing rate of return isn't that interesting, and or at least too big, what I'm trying to say. And so if we do something like this, then of course we need to factor that diminishing rate of return, but it does give us an idea that, well, maybe we're halfway through this price discovery wave, potentially, with a little bit more, so maybe 40% more in this price discovery wave, this very first one, before we then see that first major price discovery correction in the future. And of course, it's bound to happen, and really don't ignore it, because that's a high probability opportunity that really lays ahead. And 2013 showed us that this can be quite a significant opportunity, but this is 25%, for example. Here, that's also some 30-25%, and this lasts 2 to 3 weeks. Here, it lasted a little bit longer than that, but it's enough to convince people that the bull market is over and that the bear market is beginning. And so people are going to think that we're already here and going to experience a year-long bear market, whereas we still have quite a bit of upside left to enjoy. So price discovery wave 1 is right underway. It's already in play. It's 2 weeks in. We saw a 4-week price discovery wave here. We saw an 8-week price discovery wave here. We saw a 6 weeks price discovery wave right over here. And then we saw a several week price discovery correction afterwards. Multi-week price discovery correction afterwards. And then multi-week price discovery correction afterwards as well. But then what follows is that next price discovery wave in 2020. Here again, but just notice how we then transition into another price discovery correction. And even in 2013, you can see that once we finally transition out from, in fact, if you think about this as the price discovery wave 2, then you see this is a 25% reaccumulation phase and pullback opportunity. So that's price discovery correction number 2 in 2013. And then we embark on that last price discovery wave towards the upside in 2013. And here is the same for 2017, maybe a small dip in the meantime. And of course, this is that final price discovery wave in 2021. So essentially, the real takeaways here are price discovery wave uptrend number 1 is in progress. Still, it's only week 2, so still a few weeks left. We have 4 to 8 weeks generally in this price discovery wave. Then we could suffer a major price discovery correction of approximately 25%, 30%, maybe 20%. That's going to last 2 to 3 weeks. Then we're going to see that second price discovery uptrend wave before we have that price discovery correction, that second one, which could also be once again a 30% pullback, and then the final price discovery wave into new all-time highs. And that's probably going to be it. That's going to be the new all-time highs, the final all-time highs, and that's going to be it for that sort of price appreciation. So I talk about whether we're going to have a shorter parabolic upside phase in the Rekt Capital newsletter. Check it out, find out more, click in the link in the description down below to read more about it. I talk about the price discovery waves in a lot of detail in the Rekt Capital newsletter. Check out the link in the description, find out more, read more about it. There are so many opportunities still left in the market when it comes to Bitcoin's price action, with these potential price discovery corrections still ahead in the future. But just note that altcoins haven't yet even begun their macro uptrends. They're only just beginning their uptrends. So still so much more to enjoy when it comes to altcoins, and still so much left ahead for Bitcoin, but not too much left in this video. That's about it for today's video. Thanks so much. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.